Hi, this is Shane with the Rational Trader. It is Monday the 23rd, and my live result is minus 13.5 points. This simulated result over here, which we're going to spend some time on, is plus 35 points. So let's look at that and talk about what's going on there. Is it a little too loud? So the live result, let's get that up so we can see that. So that's minus 270. So trading two contracts, max loss is 300. So let's look at the live first and see what we did and didn't do. All right, so where's the open? Here's the open. And 6:30. I started trading at 6:45 today, so that's out in here. Okay, so none of this stuff, none of this initial move is on the table. And then through here, this 151, which is a long, is just a hint too soon. So that's picking the bottom, actually, is what's happening here. So we get a 151 long. So that means that this break lower, the machine is predicting that that break will fail, and you want to get long, not short. But what happens is what we do is we look for the next two bars. And we're looking for an up bar, and it's a verification to make sure we don't just get crushed, right, or catch a falling knife. And as it happens, we go 1, 2, and that's it. We stop looking, and then 3 is right there. So we end up missing this just beautiful move. Now we would have missed it, and I would have missed it the way I trade, because I wouldn't have gotten filled. But you got to like what you see there in terms of the signal. All right, so that's something to keep in mind. We get long here for a little bit. So we move the stop to entry minus 5 and then take a small loss there. Chop, chop, chop. There's a 141 break higher here, which there's a little bit there. All right, but we don't take it because of this here. So this says note, because it's considered choppy, don't do it, which is a little unfortunate. As I'm trying to think here as a human, how would I feel about that? This is a pretty long straight move already. I'd likely be looking for a test and a pullback and then get long. Let's see here, and then we get short here, which is wrong, right? This break here predicts short, and which is not correct. So we take a 10 tick loss there. Pretty choppy through here. It opens up, and this is super painful. That's a long, all right, but we just get stopped out to the tick there. This is actually a little ugly looking right here, where these bars are drawing. Anyway, so 186 is a, what is that? It's on this bar here. So it sees this pullback short and says, I think that pullback will fail. So then we go in on the next up bar if it's within the next two bars, right? So that's right there. It's a really odd looking bar. Actually, you know what? I know why it looks so odd. It's because the printing of the code here is drawing over the bar, so we can't see the whole bar. Anyway, so you can see stopped out to just a few ticks before a nice big move. So really a couple of unfortunate cases here today in the live account. Now let's look at this simulation account that did so well. It's using the exact same model. In fact, let's verify that just to make sure. So desktop. And this is the live here. And this is the opening the window. Where is it? This is the sim. So we want to see the YAML file here. Okay, and this is what we're looking at right here. Rev 55, 30 target, 0720. So the normal model with data through last Friday, and then this is here, and it's the same. Okay, so we need to verify that it is the exact same model. This is important because if you look at this difference here, this is 35 points. What is that? Almost $400. This is down 270. So $700 turnaround, something like that. So let's take a look at the differences here. Now this simulation is so it's using the same model, but what's it doing different? And what we're doing is that we're adding the structure of the market into the equation. And so this is a little bit of a busy chart now because it's got all the flags and lots of other lines on it. So let's try to explain what's happening here. Here's the open. So let's just bring this over here. All right, so as the market opens up, this line, that's the value area high. Okay, so the profile is drawing. And at the end of the day, the profile looked like this. Right? So you had like a sort of a normal profile built down here, and then the market broke higher and started to build volume here, and that was it, right? We closed right there, and then even after that 50 minutes after the cash session closes, the market ran up. Okay, so you had this sort of bimodal distribution here. All right. So, but while it's drawing, it looked like this here. Is this the right day? Yeah. So this was the value area high, meaning 70% of the trading occurred between the high and the low at this point in time. That line, the blue dashed line, is the point of control. Okay. Now, the orange line or the red line, all right, is a low volume node. A low volume node is a node where not a lot of volume is traded at. Okay. And so the current yellow lines here are low volume nodes for the current volume profile. So for the volume profile at the end of the day, but while that profile is building during the day, those volume nodes change. Okay, and so I track those. I track the nearest low volume node above and below price. Okay, so here, as we started off, the nearest low volume node at this point in time was way up here at 73.60, and the low volume node was down at 73.39. Now, a low volume node means that there hasn't been a lot of trading there. You can kind of see how it's useful. You can see it here before the open, how you keep sort of coming down and not going through it. So we look at low volume nodes. There wasn't a lot of interest by either side to trade there. There wasn't a lot of agreement that was a good price. So our expectation is, the theory is that we expect price to either bounce off of it or blow through it, one of the two. But it's not going to hang around there. If it hangs around there, it's no longer a low volume node. And in fact, you can see this line right here, the one I just drew, it stayed a low volume node for a long time. All right. Now, so what are we doing though? What we're doing is we're choosing when to enter or when to ask for a prediction from the machine learning system based upon proximity to either the low volume nodes, so here or here, right, at that point in time, all right, or the value area high or low, okay, here or here, okay. So if you're near them, one of those, if you're within 10 ticks, a value area high, a value area low, or a low volume node, then make a prediction. And the way I've coded this here so we can see it as humans is that the bars are orange. I just picked orange out of the air. Okay, so orange bars mean I'm making predictions. All right, so nothing. We don't start until 6:45. That's out here. Actually, looks like we started earlier. In sim 6:35, so we did start here. This is a long signal, but the market's falling off, so there's no entry there. Same thing here. There's that's a 122, so it says it thinks this turn is going to fail, but because the market's just falling off, we end up not doing anything. You'll notice that we're ignoring. We're not even bothering to do anything all through here. Only until we get close. Right there. There's a low volume node right there. You see that orange line? So briefly, there was a low volume node as the market traded through this point and then didn't didn't do much else, right? So then what happens? Okay, so then here, as we approach both this low volume node here and the value area low, we get a prediction to get short, and we add on the break as well right there. So we get short there, take first target there, add on the break, but then the market's not there's no follow through, so we get taken out right there. All right, so we make a little bit there, 5, 6, and then minus 1 3/4 on that add. There is no concept in this chart of the chop avoidance. Okay, so if you recall from this one here, we've got these backgrounds are drawing because they're an attempt to help us avoid choppy markets. The idea with this chart is that that's not necessary because you're picking your spot differently. You're picking your spot if you're at a low volume node. There hasn't been a lot of trading by definition. If you're at the value area low or high, then you are presumably pretty far from where most of the trading has occurred, which is the point of control. I say presumably because it turns out that's not the case for the ES, which has a much tighter range. Nonetheless, and in fact, if we look here, I drew this yellow rectangle because I don't like any trading here because you're right on top of the point of control. This is where most of the trading has occurred today, so I want to make an adjustment in the system to not trade if you're too close to this, all right? Because we're getting trades here because you're close to the value area high, all right? But you've crossed a low volume node right there, but you're right on top of the point of control, which is where most of the trading has occurred that day, and we don't want to be trading there. That's not where we want to be. That's a target, not an entry point. All right, so I believe there's a refinement there that needs to be added. So anyway, what happens here? We get short, we get long, and take a full loss. Okay, so there's minus 10 ticks times two contracts. We get long here on this break. So the other trade, in the live market, we're not allowed to take that one because there's this chop avoidance going on. It's this thing right here, right? And here we're doing it differently, right? So we're actually testing the value area high. An interesting thing to do would be to look at that distance and see what that is. Minor interruption there. So it would be interesting to see what is that distance, and then in my head, what I have is you have to be double the bar height away. So I'm not sure if that fits that criteria or not, but we'll see. So we're breaking out there. We take this long, get that, and then get taken out on the trail there. And then up here, we're at this low volume node up there. You see that? It's orange. Later on, it shifted a couple ticks higher. That's why you see that yellow line. So we short there, get first target is there. And it looks like we add there on that break, and then there's no follow through, so we end up taking we make 5, 7 1/4, and then minus 2 1/4 on that add. All right, and then here we're in the game, so we can catch this 164. We got the same signal on the other chart, I believe. So for +5 and then +9 getting taken out on the trail. Here's a case where that trail is just a bit too tight. You can see there's more to be had there. If you trail into the zigzag, give it a little more room. Okay, so then that matches the time frame that the other chart goes through. This chart continues to trade through the end of the day. We'll look at it in just a minute, but I want to go back and look at this 164 real quick and make sure I remember that correctly. Whoops, here we go. So it would have been, yeah, right here. So I'm not sure I mentioned this in the recording. I noticed it in the review. I end up not being able to take this trade here. It's signaled cleanly, and I'm allowed to take it because there's no choppy anti-chop avoidance here. But I've hit max loss, so I don't get it. and I missed that. Okay, so that's something to keep in mind. All right, so from here then, what happens next? Let's clear off all of this here. We keep trading, so is that good? Is that good for us today or bad? We take a full loss here, and that's it. There's just one more trade as it happens. Okay, so what I've seen, the reason I continue to trade through the end of the session here, is that I've seen breaks of the value area late in the day are interesting. So something's going, either if particularly if you're inside the value area, and then so you're trading down here somewhere, and then you come up to this and test it. You break through it, then there's a nice long, or you test it and fail, and you roll back over to the point of control. Here we're outside the value area already. So now we're just relying on low volume nodes for cases where we can enter. And you can see here there's a low volume node right here, which has allowed us to make these predictions, which turned out to be not profitable in this case, and no other predictions the rest of the day. Okay, so we'll talk about this quite a bit more on Saturday's webinar, Saturday's update. We've been talking about adding the structure of the market to the decision-making process, and this is, I think I'm 3 weeks into experimentation. I gathered a lot of data through last week and applied that this weekend, and this is very encouraging. One day does not a trading system make, though, so we need to do some more work, and we will see what tomorrow brings.